Hello, this is Vinny Crypto from Prosum Solutions, and today we'll be talking about Quickfingers Luc's base breaking indicator and strategy. What I will be doing is covering an introduction of the indicator, specifically for version 2.5. We will then take a look at the study and strategy settings, and I'll answer a bunch of questions as to how it works, like how it finds bases, how does the DCA layering work, and how the trade settings work, as well as looking at the various alerts that are available to you in the study and the strategy. All right, with that, we'll just jump right into TradingView itself. I'm using the desktop version of TradingView. This is a blank chart, strictly with just the volume indicator, which is pretty standard. I have it set on the 1 hour for Bitcoin US dollar on the Coinbase exchange. So what I'll do is go ahead and load up the strategy version of the indicator. All right, when you first load it, you'll start to see a bunch of lines being drawn. So what I like to do is just let's cover what you're going to visually see. So with the strategy, obviously the backtester will automatically load. You should see a bunch of different lines being drawn. Now, before I get into the discussion as to what these are, I do want to make mention of this option that's located here in the lower right corner of the chart area. There's a gear there where you can specify a bunch of different settings. The setting that I really want to identify is the scale price chart only. If this is not checked, essentially what will happen is TradingView will scale out to include all the drawing elements that the indicator has painted on the chart. And since the QFL indicator and strategy draws all the DCA layers, it will scale out to include them in view. And so what that can do is then compress your price action to be really small, so it's hard to observe. So I would highly recommend that you have that turned on, just so that the price action looks a little more normal, and anything below the cutoff would just simply get clipped. And so highly recommend that you turn that on. All right, let's just go ahead and start talking about the various things that you will notice with the indicator. So the most obvious thing, just starting from top to bottom, are the orange lines. The orange lines represent the base prices that the indicator has found, and it typically finds them using bullish fractals, which are these V-shaped pivot points. And so once it identifies one that fits the criteria as defined in the settings, it will then mark it as the base and start drawing that orange thick line. And from there, as price action starts to drop below, using the layering settings, it will draw the blue lines once it enters into a position. There's also an option where you can turn that on always. So whenever a baseline is drawn, you can always see the layer lines, and that's available to you here. Simply checking always there, you can always see the DCA layers for every base that gets drawn. Even if the price action doesn't cross it, you can at least see where they're at. And once price action starts to cross those DCA layers, you will get these triangle shapes to indicate to you that these limit orders supposedly are being filled, so you're entering into a position. So then the indicator will enter into a trade mode. And once you're in a position, it'll calculate the break-even price and then calculate the take profit relative to the break-even. If you turn on stop loss, that will also be relative to the break-even as well. And so then as you continue to cross the DCA layering, right, the dollar cost averaging of your purchase price begins to get reduced, thereby recalculating the take profit. And that's why you see this stair-step pattern being shown. This little gray area right here beneath the take profit, the green take profit, is the break even. So you can see that visible to you, and that can be toggled on and off. In addition, you'll notice that the indicator is also drawing these thick gray lines, and that might cause you to think, what is that? Well, these are the bases that it's identifying, even though you're in a trade position and it's not using them. It's just identifying them, indicating to you, hey, when I conclude this trade, one of the very most recent base will become the active base, in which it will then start monitoring price action relative to it. And so you can see these gray lines here. These are the next base, and you can also see that here in the, these are the data points that are available to you in the data window that the indicator also displays. So you can see here, these are all the DCA layers. You got break even, take profit, stop loss, and this is the next base, which happens to be that thick gray line. And then you can see the orange base and the base markers are also displayed there. So, all right, with that, I'm trying to think if there's anything else to talk about. Let's just go ahead and jump right into the settings. So the settings, it's got numerous amounts of inputs, and so what I'd like to do is digest these in the sections that they're presented in. So the sections you can see here is base confirmation settings, so all these inputs are relative to that. Layer settings, all these inputs are related to layer settings. Then you got the trade settings, and then in addition you've got chart settings at the very bottom. And so, oh, one thing I do want to make mention, what my memory was jogged by this one input right here, show statistic label. One thing you will also notice at the very last bar is a QFL statistics label, and it will demonstrate or illustrate all the various additional data points that can help you understand, like how in the history of this chart, how the layerings were used, how many layers were cracked, how long in terms of bars was it in a trade, and it gives you mean, minimum, mean, and max, and standard deviation. You also get the percent drops and bounce as well. So that should help you at least better understand how this indicator had performed in history. Okay, back to the settings. So with this base confirmation, this will now get us into like how it's going to be finding bases. So what I'd like to do is at least find a nice bullish fractal where I can use it as an example for you to better understand how this indicator is finding bases. So what I'll do here is I'll focus in on this one. It's a nice V-shaped bullish fractal. And so in Luc's videos, he does talk about price drops and bounces. So when price is dropping really fast, that's considered a drop. And then when it rises back up, it's considered a bounce. So bases are defined by the strength of the bounce. And so in a lot of his videos, he demonstrates how he identifies them visually by looking at the chart history and figuring out the story that's being told by the price action. So the indicator is very meticulous about this. Like there's parameters that kind of help it to figure out, okay, how am I going to measure this particular pivot and determine whether it's a good bounce or not? Well, the way it does that is through these inputs here about the number of bars for the price drop, as well as the price bounce calculations. And then there's the minimum price bounce, or excuse me, drop percentage, as well as the bounce percentage. These two pairs of inputs are working together to essentially identify a base by looking at the very pivot of it. And so essentially what we're doing is framing it. We're basically saying we want to look at 3 bars to the left of the pivot and 3 bars to the right in this particular example. And I'm going to measure the drop and bounce of the price action, and as long as it's at least 1% change in price, then I'm going to classify that as a valid base. So you can obviously change these to better match what you are observing in the history of the chart. So I would say to do your due diligence and just observe all the way from the beginning of the chart history. Just kind of scroll through and watch how price action is forming, and use your measuring tool to better understand, okay, what would be some good inputs for this. So for example, in this particular setting where we are looking 3 bars to the left and right of the pivot and measuring at least 1% change, this is essentially what the indicator is doing. So from this pivot, I've got the advantage of looking at this pivot, so I'm just going to use it as an example. So we're going to count 1, 2, 3 bars to the left and measure down. And you can see here that the price drop was negative 2.43%. And then for the bounce, I'm going to go ahead and start from that same pivot, or sorry, from the same candle and count 1, 2, 3. And we'll look at this and say, okay, it measured 2.6% for the bounce. And so when you look at that in comparison to the indicator settings, let me open that up, you can see that it definitely qualified as a valid base. And so then it started drawing the baseline here. And in addition to that, you also get this additional indicator here. You see how this bar right here is colored orange. This is to tell you that it was this bar was the bar that determined that this was a valid base price to start drawing the baseline. And so as a result of the manner of how this works, this is a lagging indicator, right? So all these bars need to form and conclude in order for the indicator to make the measurements and determine, okay, yes, I do have a valid base based upon the inputs we provide. So definitely I highly recommend just looking through the history and making measurements and coming up with a good judgment as what kind of values you should put into these inputs to help identify bases. Now, the reason I've set these as defaults is because I've had some feedback from users where they would add the indicator onto the chart on a time frame that was really low. And so because I used to configure the defaults to be more favorable to a 1 hour chart, generally speaking, but when people started adding it to like a 3 minute or a 5 minute and they weren't seeing anything drawn, they thought that the indicator was just not working. But in reality, it's because the inputs were really favoring high percentage drops and bounces for 1 hour. And so I ended up lowering it down so that at least for someone that would be on a smaller time frame, it would at least show something and it would reduce the confusion about how the indicator is working. So the one input I didn't really cover is this one right here, so we'll get into it now. It's anchor the baseline on the bars, and then you get to choose whether it's the minimum of either the open or the close or the actual low price of the candle. So if I set this to low, the indicator will redraw and it will place the base price at the very lowest value of that particular candle that was determined to be a bullish fractal. So I typically like to use open close. Seems to work well. In addition, you can do some volume analysis with this. There was a video that I observed where Quickfingers Luc would discuss how to use the volume to help validate if a price, a particular pivot point happens to be a good base price. And what he would say is, whenever you see strong reaction from a particular price point, usually the volume is another second indication that we had a lot of market participants agreeing that this price is too low and thereby causing the price up, driving up. And when volume is low, usually it'll cause some kind of suspicion on that. So the way that works is you can essentially use the volume size as well as its moving average. So here I actually have the volume indicator present, and it's configured to basically show a moving average length of 20 bars. And so that's represented here by this orange line. So the way I implemented this in terms of helping you validate volume is you can specify how many times greater than the moving average do you want to specify as the minimum amount for this particular pivot to be valid, right? So let's say, for example, that the moving average here, if I put my mouse on this bar and look over at the data panel, you'll notice here the volume moving average is 582. And this is the area that I was looking at right here. So when I place my cursor on that particular pivot, you'll see this is 582. But the volume itself happens to be 521. And so what you can do here is you can say that this is how many times I want the volume to be greater than the moving average. So a value of 1 would simply mean I just want the volume to be at least whatever the moving average is. But if I set it to like 1.5, then essentially what I'm saying now, or you're now configuring the indicator and saying, I want the volume to be at least 1.5 times greater than the moving average, right? And you can adjust the length here. So for this particular one, I would set it to 20 so it would match my volume here, and I get an accurate portrayal as to what's being used. And so since I set this to be 1.5 with a length of 20, you'll notice here that this pivot did not pass the validation. So you can use this as a filter and saying, okay, not only do I want it to be 3 bars to the left and right with a minimum 1% change, I also want that volume to be significant. And so that's how bases are identified. Now, this last input here called minimum percent change of price for new bases, this is essentially saying below the base price, I don't want to form a new base or identify a new base that's within 5% of the current base, okay? And so I can show you an example using this chart here. I'm going to go ahead and disable this by setting it to 0 and re-enabling this. There was a particular point in here where I found a good example of price action where this input can be discussed well. Yeah, this is it right here. So I'm going to go ahead and zoom into this price right here. So as you can see, we drew a base here, and then price action came below, right? I'm going to go ahead and set this to be at the very front, just so I can paint on top of the candles. And as price action goes down, you'll notice it almost got to the very first layer, and then it started to react and rise back up. Well, there's a possibility that this formation of a V pattern could identify an additional base, and then you get an orange line drawn here. Now, it is quite possible that price action might drop back down again and then cross layer 1, but since there was no specification for spacing, it could very well draw that in there. But with this particular settings on this indicator, it says 5%, which means no base will get identified between the base price here and 5% below. So essentially layer 2 happens to be 5% below the base, and so thereby meaning this indicator will not allow any bases to be accepted within this range. A good practice, unfortunately the defaults don't do this, but a good practice in my opinion would be to set this value to be the same value as your layer 1. In this way you can at least ensure that any kind of price action movement that might bounce up and down would not be allowed to form a new base if they qualify in all the other settings. So that gives you some opportunity to just let the indicator or let the price action at least attempt to hit that layer 1, and you can then enter into a position when it does cross. Now, this particular spacing rule does not apply to values above the base. So if a new base is identified above, it will be accepted immediately. So it's only below the base that rule applies. All right, that pretty much covers all the base confirmation settings. Hopefully that's been more clear. We'll start looking into the layer settings now. So with the layer settings, there's various inputs here. As you can tell, the obvious ones being the various layering percentages. All these values are relative to the base price, to its current base price. So whenever a base is identified, all the layering values will be relative to the base. Now, you have a couple types of units that you can choose here. You can tell the indicator that these values are considered percentages, or you can tell it that it needs to be a fixed amount. If it's a fixed amount, you'll want to use the actual quote price to put in values in here, and it will use that. And this is useful so that if you have large price movements, you may not want to use percentages of the base price. You simply just want to use the fixed amount to offset from the base, and so that's useful there. This other input right here, it's poorly labeled, but essentially what it does is it gives you grid type trading. So if I enable this to say cracks next layer, it looks like I've got an error because the value for the initial capital is too low for the Bitcoin chart. So I'm going to go ahead and increase that to 10,000. That should cause it to repaint. Yep. And draw the new values. So as you can see here, what's happening is by using that new setting, essentially what we're doing is grid trading. So when the price action comes down or enters into layer 1, which creates a limit order to sell at the base. And then as I continue to cross additional layers, limit orders are being set at the layer above it. And so as you can see here, it crossed the layer 2 and then came back up and exited. Sorry, this was layer 3. And then it exited layer 3, and then it came back down and entered back in at 3, and then exited at 3. So if you want to do some kind of grid trading back up and down, you can definitely do that here. And with this type of setting turned on, the take profit is really meaningless at this point. It's only being drawn here because my take profit input has a value. So if you were to use this setting, I would recommend just setting 0 for the take profit so that you can reduce the drawing noise that is placed here on the chart, because take profit is really not being used with that setting turned on. Alright, so that pretty much explains all of the various inputs for the layer settings. So let's go ahead and take a look at the trade settings. So the trade settings here gives you a pretty extensive list of inputs. You can specify the start date. So this is if you really want to zoom in on a particular point in time on the chart. Especially if you're using automation, this input would be very important so that you can set the time to be the time that you want your automation to begin. These next few inputs are very important about how the sizing of the entry order is going to work. So I'm going to come back up here and set this back to base respected. So essentially what we do here, since we have position size multiplier and an entry order size, these three work together to essentially start calculating the position size being multiplied for every layer that gets defined and drawn on the chart. And especially when price action crosses, there's going to be your volume starts to increase in your position. So the reason we have these two inputs here, I want to make a note, because in the strategy version, TradingView's Pine script does not make available the value that you specify here as an input. Now, in the script, I can actually default the value for you and specify this value as well. But once it's changed, these two values are not made available to the script. So as a result, I had to replicate these inputs over here on this side so that way my script can use it. And so what I've done to assist people that are using this indicator is I've created a spreadsheet that helps me keep track of how the order size is being multiplied for each of the DCA layers. You'll notice that the entry order size does have two different unit types. You can either specify contracts for that unit, for the order size unit, or you can specify percent of equity. Now, percent of equity is assumed to be percent of the actual initial capital. Okay, so I'll go ahead and just accept these two values here because using a position size multiplier of 2 with how many layers are active here? We've got 8 layers active. This is basically the maximum order size that can be used with an initial capital of 10,000 with a multiplier of 2. So specifying anything larger than this, you will essentially exceed the amount of capital required to run this configuration. And what I've done is I created a spreadsheet that kind of helps me make sure that these values are balanced. And so what I've done with this spreadsheet is, in this particular spreadsheet, you'll notice these colored inputs. You can enter in some information. So if I set this to be position size multiplier of 2, the entire table recalculates and it shows me, all right, if you had 10,000 as initial capital, this is essentially the percent of the total amount of your capital that you should not exceed for your entry order size. So if you want to start changing this, I highly recommend using this spreadsheet to essentially inform you as to what would be a good entry price at level 1. So if I were to change this to be 1.5, I would have to use a value of 1.33535% of my equity in order to not exceed the entire amount of my equity. So I'll go ahead and copy this value. I'll come down here and set this to 1.5 and then paste in that value from level 1 and remove the trailing percent sign. And you'll notice now that the indicator will redraw and show me the performance output from that configuration. So these three fields are very important to get correct, so that way you're not exceeding the capital that you are making available to the indicator. And then the numbers will be more accurate, especially for real-world trading. So they should reflect exactly this particular configuration. So let's see, additional inputs. We've got the maximum number of cracks allowed per base, maximum number of bars to remain in a trade. Essentially, they're going to do what they specify here. So once a base has been cracked by definition in this indicator is once the level 1 DCA layer has now been breached or cracked, we now consider the entire base cracked, and so we're in a position at this point. And so that's what that would mean. So once a base has been used up at least once, it won't be reused again. Maximum number of bars to remain in trade. Essentially, this is saying how long do you want to remain in a trade. And once this number has been exceeded, the trade will close no matter where the price is at. So it's possible to be in a loss. Here is the stop loss percentage. The value is meant to be negative, so this will be relative to the break-even price that's on the chart. So this will be a field that you're going to want to experiment with, because you're going to want to make sure that your stop loss value is not going to come before any of the DCA layers and thereby interrupt the trading, right? So if you specify the use of 8 layers, like in this particular input, down at 89% below the base, you want to make sure that your stop loss percentage is not going to be placed above that, and thereby making layer 8 unusable. So you'll want to experiment with that. In this particular indicator, it's set to have a take profit of 5%, and that's relative to the break even. These other inputs here, it allows you to change your take profit percent as you start crossing certain layers. So this is useful in saying, like, you know, if I get down to the 6th layer, you know, I'm willing to take less profit. You know, I'll be willing to go 2.5%. Or I'd be willing to maybe go at 2%, you know, layer 7. And then if I get to layer 8, you know, I'll be willing to get 1%, because as you start going down in price, you might be more willing to increase your chances of closing the deal by adjusting the take profit. Now, it doesn't have to be less. I mean, you could truly be more aggressive and say, you know, if I go deeper in price, I want more profit. So you can adjust this to whatever value you want. It doesn't have to be lower relative to the main take profit input. The last section here is trade eligibility. So this is essentially defining some kind of rule using a chart or an indicator on the chart to help you determine whether a base is eligible for trading against. Okay, so I'll use an example. Typical examples have been EMAs and RSI. So I'll show you an example of how to use this using an EMA as well as an RSI indicator. Okay, so I'll go ahead and add an EMA. Let's see, I'll go ahead and add an EMA indicator. EMA. Maybe it's under SMA. That's a smooth. Why am I not seeing EMA? Oh, here it is. Oh wait, these are, where are the built-ins? There it is, moving average exponential. I always get tripped up by that. Okay, so let's say I add an EMA indicator here. It's in blue. I'm going to go ahead and make that bright yellow and real thick in price so I can see it. I want it to be 200. So what we can do here is we've got a 200 moving average on this chart, right? And we might want to say something like, you know, I don't want to trade or accept any bases that are below this EMA. I just want to trade on bases where the price of the the base is above the EMA. So if that was a condition that you would find acceptable, this is how it would work. So you would add your EMA on the chart, come down to the enable trade eligibility condition, and in this drop down right here you will want to select your EMA. And then for the rule definition, you will want to say, I want the trade to be eligible when the base price, and you can see here the various different options, and I'll cover them in a moment, when the base is either greater than, less than, between, or not between. So I'll just say greater than the value of this chart indicator that I selected up here. Okay, so that's essentially what's going to happen. And then once I check this box right here, that rule is now active, and we should never see any bases being identified below the EMA. So it acts like a filter. It basically just says, you know what, I only want to trade when we're heading up above the EMA. I don't want to deal with anything that's below it. And so that is a particular option. And conversely, you could do something the opposite too. So you can come in here and say, you know what, I just want to trade on anything that's below the EMA. And you would just simply say, I want this to be less than the EMA indicator. And there you can see where it's actually selecting those. And obviously any kind of filter will impact its performance as well. Let's see, an additional one. So you might be thinking to yourself, all right, let's talk about these options. Well, in any of the conditions you do, it will only work on additional indicators that have a single data point. Okay, so if you have an indicator that has 2 data points that you want to test against, that's not possible with this design. You can only make 1 data point available to the QFL indicator. So, but if you happen to have like an indicator like an RSI where you want to specify a range of values, that's where these options, these inputs right here come into play. So I'll show you that example. So I'll go ahead and drop in a RSI indicator, and I'll just leave it at the default length of 14. I'm not going to really configure that. And then down here at the trade eligibility condition, I'll go ahead and select the RSI. Right here is the very last value. And now I'm going to say the rule, okay, I want the trade to be eligible when the chart indicator, which is in reference to this, the RSI, I want it to be maybe between the values, these custom values of 30 and 70. So whenever you choose the options between or not between, essentially you're preparing to use these custom values, because that's what is going to define the lower bound limit as well as the upper bound limit. So custom value 1 would be considered the lower bound limit, and then custom value 2 would be considered the higher of the two. And so this essentially is now saying I want trade to be eligible whenever the RSI is between 30 and 70. And then you can see the chart forms there. Or you can say something, you know, I only want to trade when it's below. You can say less than 30, okay? And so when you do that, the indicator will only accept bases that are less than 30. At this point, since we're choosing less than, this upper limit is really ignored at this point. It's because range is really not needed for this operator, this comparator. So this is how you would configure it there. And so in summary, this is the area that allows you to link different indicators that are on your chart, and you can use them to filter. But if you have an indicator that has multiple data points that you maybe want to test a crossover, that would not work here. So you would either have to write custom code in that indicator, like if the indicator source code is available to you, you could output a data point that would essentially deduce the multiple conditions down to 1 data point. It could be like a true value, like a 1 or a 0, and that would be something that you can use here and be able to test it. Or you can give it a range of values. As long as it has a single data point, you can use that for trade eligibility. Okay, for the chart settings, it's pretty simplistic from this point out. Essentially, if you're using this indicator to trade on certain exchanges and the exchange has specific criteria for the precision of the price, you can configure that here. So in this particular instance, you can say I want prices to be adjusted to the 100th position. And then you can specify how you want to adjust that price. Do you want to simply truncate all of the numbers that came after that position, or do you want to just round up? So you can do that. And obviously you can show the the break-even price as well as the layer crossing shapes. You have some visibility control there. And then the last few settings have to do with the statistics label that's at the very end on the real-time bar right here. So if you find this not to be readable, or you just simply don't like the colors, you need the colors to be something else, a little more legible, you can definitely change those here. You can even move the label away from that last bar up to 500 bars to the right. So if I set this to 500, you'll notice that when the indicator redraws with my new settings, you will see not moving. There we go. Just took a little bit. You'll notice that the label now gets repositioned 500 bars to the right. So this is helpful to reduce clutter. Like, you want the label there, but you just don't want it right next to the current bar. You can definitely move that as much as you want, up to 500 bars. So I'm trying to think what else. So like I said before, these inputs are not available to the script, so it doesn't really matter what you put in here. For the strategy version, if you want to have real-time tick information like what the study version can do, you can check that here. You can adjust the initial capital. The pyramiding, this is how many layers maximum are going to be handled in the indicator. Like, pyramiding means how many concurrent orders you're going to have on the chart. And so I've configured it to default to 9, since the maximum possible pyramiding that can take place is 9, since we only have 9 DCA layers. I'm trying to think what else you would want to know here. Yeah, that pretty much covers it. All right, so let's go ahead and take a look at the study version of this indicator. So what I'm going to do here is I'm going to hide the strategy version. We can go ahead and load the indicator version. Okay, loaded up. So it has the same defaults as the strategy version. I'll go ahead and open this up. So all these inputs are pretty much the same. The defaults are the same. The one unique difference would be the entry order size and unit. For the indicator, it doesn't really need that. The only reason we brought them into the strategy version was to help with the performance of the backtester. But since backtesting is no longer an output feature for the study version, I just got rid of it. I basically standardized to just one single unit, and just moved on from there. The calculations really didn't need those two things for the study version. So all the inputs are roughly the same. I'm trying to think if there's anything unique. Nope. Another thing that the indicator provides is the custom alerts. So now we're going to start talking about creating alerts at this point. So when you create an alert for the study version, you're going to get multiple custom alerts that I have programmed into it. You've got the any cracked layer. Essentially, this is an alert that will fire on any time a layer gets cracked. Now, one shortcoming with this particular alert condition is that if the price action crosses 2 layers in a single candle, then the alert will only fire once. Okay, and it's pretty much because of this once per bar or once per bar close. So TradingView basically manages alerts and only allows it to really operate within these 4 options. And so the any crack layer, while it seems useful to keep the number of alerts down that you would create, just keep in mind that it will only trigger on the very first layer that gets crossed. And then if a second layer gets crossed in the same candle, this alert will not trigger because of that limitation of once per bar. So We also have base cracked. Base cracked happens to be the event. Let me see if I can find it. I'm going to go ahead and sort of reduce clutter here of all my indicators that I've got going on, just so we can better see. So you see this cross shape right there that looks like a X. That's essentially the base cracked. So whenever the price action comes in contact to the base price, you're going to have the base cracked. And I would set that to be once per bar, so that way as soon as it touches it, you'll get alerted. If you choose any other ones, that would just be because you wanted it that way. Once per bar would not make sense. Essentially, it would fire as soon as the bar completes. But once per bar would be best for this particular condition. Base created, this is essentially when the pivot has been found right on that orange bar that I highlighted earlier. That's essentially when this event gets fired, as soon as it identifies the base pivot point. So I recommend only using once per bar close on that, because it's possible that you could get a false signal where if the bar was currently forming and it determined, okay, I found a base, but then once the bar closed, the base no longer was valid, you could get that issue where it fired an alert, but then it didn't draw the line because it determined it wasn't valid anymore. So I would highly recommend using once per bar close for this particular alert event. Base respected, this is essentially whenever the take profit line gets crossed or the stop loss. Okay, so this is one particular condition that you can encompass both the take profit or the stop loss. Now, they are separated. Down below here, you can select just stop loss or take profit, so you can choose an individual event if you want. Otherwise, the base respected would include both of them. Then you've got all the various layers of cracked and respected. The respected are only there if you're using the grid mode that I showed earlier. That's when these events take place. Otherwise, whenever price action crosses through a layer, you can receive that event using the layer cracked alert. The rest of the alerts are pretty stock out of the box from TradingView. So that is pretty much alerts for the study version. Now, the alerts for the strategy version is pretty unique. This is so when creating alerts on a strategy, I highly do not recommend using strategy alerts for automated trading. There's a lot of conditions and disclaimers around alerts because of how the broker emulator works that TradingView has published in their blogs. So I would highly recommend reading those. But it is useful in the sense, like, if you want to keep track of how strategies are performing, especially when you look at the back tester, all this information is available to you using these placeholders. And this placeholders, there's actually some special ones for strategies that are not available for the study. And you can read about those here using this little question mark icon. If you click on it, a panel will slide out describing all of the various things that are available to you as placeholders, both in the study version and for the strategy, which happens to be this list right here. So you can get things like position size, the action, whether it's a buy or sell, contracts, price. So all of these are just strictly related to the strategy, and it can be very, very useful for like a signal type service that you may want to know, because this allows you to essentially create one alert but get all of these data points as each limit order is executed. You can receive all that. So any of the custom alerts that I make available in the study version are not available here. So this is just strictly for the entries and exits that are occurring within the back tester and strategy. So keep in mind with that. All right. I believe that pretty much concludes the overview of the Quickfingers Luc's base breaking strategy and indicator. If you are interested in using the full version of this indicator, you can definitely visit my website, which is available under my Prosum Solutions profile. I do make it available on our store for purchase, and which will then grant you access to the private script and you can fully use it. My website also has documentation that you can read about as well. And so give it a check or give it a review and see what you think. And if you like it, hopefully we'll get to meet each other and we can discuss how you're using it and we can collaborate on it in my Discord. And with that, I'll go ahead and conclude the video. Thanks for joining us. If you have any questions, leave some comments, like and subscribe to my channel, and I hope to talk to you soon. Thanks. Bye.